This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
Okay, we're still on the performance measurement section of paper F5. And this lecture is on non-financial performance measurement. Now, in the previous one, we looked at financial measures, and clearly any business wants to achieve more profit. And I said enough about that and all these different things we could look at in the previous lecture. But it's very easy in the short term to improve profitability. For instance, if I moved into your business and I took over running your business, an easy way of increasing the profit in the short term would be to sack half the staff. I mean, it may sound silly and I'm being extreme, obviously, but if I sacked half the staff, clearly the cost goes down enormously, profit goes up. The trouble is, fairly obviously, that whatever it is your business is doing, if there are fewer staff there, then the danger is we start doing a bad job and producing poor quality products and giving poor quality service. But that probably won't affect us immediately. It'll be some time before customers realise that they're not getting good service from us. And so, in the very short term, I can cut the costs, increase the profit, but next year, customers start disappearing. Next year, profit starts falling. So, as I say, in the short term, there are lots of ways you can increase profit, but you can't keep cutting costs forever, and you're going to start losing business. And so, if we want to carry on being profitable in the future, if we want to continue to grow the profit, then we need to make sure that we're maintaining or improving, for example, quality. We need to be checking each year that we are improving quality, because if quality starts falling, then however profitable we are at the moment, the danger is, if quality falls, that in the future we'll start losing profit. And that's the sort of thing we're looking at here, and much more important for paper F5 than pure financial measures. The sorts of things we might look at, like quality, to hopefully make sure we achieve profit growth in the future. Now, various people have written papers, academic papers on this. What should we be looking at? And the two you're expected to be aware of are the two in this chapter. And the chapter itself is very short. But the two here, which are Fitzgerald and Moon, which is on the first page, they were two people who wrote a paper looking very much at service businesses, hotels and things, what they should be looking at. And the other one, Kaplan and Norton, who were two people who wrote a paper which is very much, you'll see, very similar idea, but they were focusing more on manufacturing businesses. And so let's run through the two. First of all, Fitzgerald and Moon, and as I've written, it focuses on performance measurement in service businesses. Why am I writing this down? But I'm going to anyway. Fitzgerald, Mr. Fitzgerald and Mr. Moon. And they said there were these six areas rather, that we should focus on. Now, I'll run down them, and to make sense of it, just suppose, service businesses, suppose we're a hotel. You all know, they don't pick obscure things here. You all know what a hotel does and what we want from a hotel and so on. So I'll use that as an example as we go through. And they said we should look at the following areas. Certainly, we should look at financial performance. And I said enough in the last lecture about things we might look at. Certainly return on capital employed, everything else. However, the non-financial ones, I'll keep to the order that's here, but they said we should be looking at competitive performance. And we should measure each year, we should keep measuring how well are we doing compared with our competitors. Now, I said I'd use hotel as an example. If there's a hotel in your city, how well or badly they do is largely, how many people come and stay. Well, if the tourists stop coming to your country for some reason, then obviously our sales go down, everybody's sales go down. But we need to make sure that we're doing better than our competitors. If they may be going down because there are fewer tourists, but if we're going down much more, something's going wrong. And so how can we, you could be asked to suggest measures we might use. What's the obvious way of trying to measure how well we're doing relative to our competitors? To look at our market share. Over the year, how many customers do we get as a percentage of the total in all hotels in our area? Now, it's only a suggestion. If you asked any of these, look at the information in the question and make the best use of it. But wouldn't that be worth looking at? Because, whether the tourists this year are higher in total or lower in total. If last year we had 10% of the total tourists coming to our city, and this year it's only 5% of the total, it means we're doing something wrong, or the others are doing something better that we should be doing. So I suggest that's something we should look at. Next one, quality. Well, quality is, of course, desperately important. I said at the start, we want to make sure that we're delivering quality to our customers and that we are maintaining or hopefully improving quality. However, it's easy to say that. I think our quality is better this year. But how are we going to measure it? We need a way we can measure the quality, put a figure to it. The previous one, market share, we put a number to it. 20% this year, 10% last year. We've got a figure. Well, similarly with quality. It's no good as just wandering around saying, it looks better or it looks worse. We need to decide how we're going to measure it. Now, I wish you were sat here and then you could suggest things to me, but for a hotel, how might you actually measure quality? There's several things you might look at. For instance, and they're only suggestions, I say again, after this, do practice past exam questions and see what information's given and how you might make use of it. The sort of thing you might measure is the percentage of customers returning. On the assumption that if a customer, we're a hotel, remember, if somebody comes back a second time, then presumably it means they were happy with the quality. And so if we could measure what percent of people came a second time, we could put a number on it, and we could compare this year with last year and see if it's better, see if it's worse. What else could we measure? Percentage of complaints. Maybe we should keep a record of any complaints we receive. More complaints is a sign quality's gone worse. Less complaints is a sign it's got better. Just the number of complaints on its own wouldn't do. If you're twice as many customers, maybe you will get twice as many complaints, but perhaps do it as a percentage. But again, it's something we could put a number on and then say definitely it's better this year or it's worse this year. So only suggestions, don't learn them. Every question's different. I'm just trying to make sure you're happy what we mean by quality in this sense. And so importantly, the fact it needs to be something we can actually measure. Just one thing people often say is, oh, have a survey. You know, many hotels, most hotels I've been in fact, have a little card in the room where it asks you to grade how happy you were, you know, little blobs, not satisfied, very satisfied, and things in between. Fine, but the survey itself isn't a measure. Have a survey, but the measure is the average score. You know, if it was 1 out of 5, 5 means it was great, 1 means it was awful. Fine, put those cards, have a survey, but then work out the average. And if 5 was the best and 1 was the worst, well, the average, if that's going up year by year, it's good. If it's going down, it's bad. And so, average score from a survey. All right, the next one is a slightly harder one to explain, flexibility. I think it's best, oh no, I'll write first. What we mean by flexibility, but then I'll give you an example, is how quickly can we respond to changes in the level of demand. I'll give you 2 quick examples for our hotel. Hotels, obviously, some weeks they might be very busy, they're full. Other weeks, they might be very quiet. Now, we've got lots of costs involved, staff costs and so on. And so, we need to be able to cope with busy periods. We need enough staff to be able to cope with busy periods, but otherwise we're not going to be able to giving a good service. But the problem is that if we have 50 staff for our hotel to be able to cope with busy periods, when there's a quiet period, we're paying all these people when we don't need them. The ideal would be is that day by day, if we're very busy, we've got more staff. If we're very quiet, we have less staff. And how would we achieve that? Hotels can, it's not always possible, but have as many staff as we can that are on a temporary basis, that we can get in just for the day. We have some full-time staff, obviously, but others, there are agencies, certainly in the UK, that will provide staff just for a limited period. And so how might you measure that? Well, the number of temporary staff. Again, it's not a rule, but it's something you might consider. The more temporary staff, or perhaps as a percent of the total, the more temporary staff, the more you're able to change the staffing levels. Oh, just one more example. A lot of hotels have a restaurant and a bar. And at different times of the day, the restaurant might be very busy and need lots of waiters, and maybe the bar's very quiet. At other times of the day, maybe the restaurant's very quiet, and so we don't need many waiters, but the bar's very busy and we need more staff there. Well, instead of having bar staff, restaurant staff, why not have staff who are able to do both jobs? The restaurant's busy, more of them move into the restaurant. If the restaurant's quiet and the bar's busy, they know how to work in the bar. Again, we'd be flexible. So the number of staff with more than one skill. Now again, I keep repeating the same thing. These are only suggestions. There's no point in learning those. Learn the headings. I doubt you'd be tested specifically on the headings, but it's good to have them as a framework. But learn the headings. But provided you're happy what sort of thing we're looking at and the fact we need numbers to be able to compare and say it's better, it's worse, it's then very much a question of seeing precisely what you're asked for in the exam and what information you're given. And you can only get that by practicing past questions. There'll be plenty of them in your revision kit. Anyway, nearly there. Resource utilisation. It's looking at how efficiently we use our resources. I'll give you a few examples. We're in a hotel. What are our main resources? One are the building running costs. There's a lot of costs in running the hotel, you know, the heating and the electricity and so on. We accept we've got to pay it, but we want to make sure that we're getting as much for it as we can. And surely the ideal would be to have the hotel always fully occupied. If all the rooms were filled with paying guests, that's the best we can hope for. But if we're having to pay all these costs of heating, electricity and things, and the hotel's always half empty, then surely we're wasting the resource. And so for things like that, how might you measure how well we're using the resource? The obvious one would be the occupancy rate. The average percent of rooms occupied. And the higher the percent, the better. 100% occupation, we're using the resources as efficiently as possible. 10% average occupation, something's terribly wrong. And I think all hotels keep a record of their occupancy rate. Obviously, they're up and down day to day, but overall they want to get it as high as they can. Airlines do, all airlines do. The occupancy rate in the plane, because what they're aiming for, the ideal would be to always have the aeroplane 100% full. The nearer we can get to that, the better. The other main resource, I think, for any service industry is wages, staff costs. With different types of staff, but think of the cleaners who clean the rooms. How do we make sure we use the cleaners as efficiently as possible? You know, the more rooms they're cleaning, the better. So how could we measure it and put a number on it? Something like number of rooms per cleaner. You know, the more rooms on average each cleaner is cleaning, the better value for money we're getting. And that stands to reason. There can be a clash with quality. You know, clearly, if you've one cleaner per room, the room will be beautifully clean. The quality will be better. On the other hand, if one cleaner is having to clean 100 rooms, there's a danger they're not quite as clean. But there is a balance. You know, we can't provide perfect quality. We can't afford to. You know, it's striking a balance. But that's what I mean by resource utilisation. Finally, on Fitzgerald and Moon's performance areas is innovation. They say the last thing we should be looking to measure is what new ideas have we got. If we want to keep ourselves as the best hotel in the area, we forever need to be looking for ways to improve, looking for new ideas. And really two sorts of ways. One is we're looking to provide new services. Maybe we haven't got a bar at the moment. Oh, that's a good idea. We'll have a bar. Or maybe extra benefits. My sister used to be in the management of a hotel, and they used to keep detailed records of each guest's preferences. So when they came back, they could give them what they liked, you know, put flowers in the room. What sort of flowers do they like? Well, it was improving the service. It was a new idea, innovation, and clients like it if they turn up and their favourite flowers are in the room. So one is, it's very standard here, the number of new services offered or tried. They won't all work. We should keep thinking of new ideas. I say they won't all work, but if we don't keep thinking of new ideas, then we never will improve anything. Or the other one is different ways of providing existing services. You know, maybe a hotel install a new computer system, which will help us allocate rooms faster, check people in faster. We already check them in, but if our new computer system helps us check them in more quickly, and if customers like that, then it's a way of improving. All right, so I hope all that made sense. Rather than this be too long a lecture, I'll break it now, but in the second bit of the lecture, I'll talk about Kaplan and Norton, who is very much the same sort of thinking, that they're looking at how we might apply it more to manufacturing businesses.